Welcome back to the deep dive. Today, we're going to be talking luxury watches. We're diving into Ethos Limited's financials for the quarter and 9 months ending December 31st, 2024. And you've sent over quite a stack of stuff, a presentation, a financial filing, and even a report from a monitoring agency. So get ready to see what makes this company tick.
It's pretty interesting, actually. Ethos Limited is really carving out a niche in the Indian market, focusing specifically on luxury watches and accessories. It's not just about telling time, it's about offering a curated experience with over 70 top global brands, all in their boutiques across the country.
And that curated experience seems to be working. The average Ethos customer spent, get this, over $200,000 on a watch in the 9 months leading up to December 2024. Which is a big jump from last year. So it seems like there's a growing interest in luxury in India.
Yeah, you see that in a lot of emerging markets. As wealth grows, so does the demand for luxury, especially things that show success and exclusivity. And Ethos is really capitalizing on this by making the whole watch buying experience like an international standard retail experience.
Okay, so people are spending more on luxury watches. But what about the company itself? Are they making money from this?
Oh yeah, for sure. Their revenue in Q3 fiscal year 25 jumped by a huge 31.5% year over year to hit 369.9 core, and for the 9 months, they hit 940.3 core, a 26% increase.
Wow, these are impressive numbers. But revenue is only part of the story. What about their profitability?
Well, that's what's really interesting. Their EBITDA, which measures operating profitability, grew by 23.6% in Q3 and 22.8% over the 9 months. So basically, they're not just selling more, they're also getting better at turning those sales into profit.
So that's a good thing for anyone looking to invest.
Yeah, exactly. And actually, even though their margins shrunk a bit, it's not necessarily a bad thing.
That's what I was just thinking. It seems a little strange. More sales, but smaller margins.
Well, a lot of that is because they've been expanding so quickly, adding new stores all the time. 13 new boutiques just in the last 9 months, for a total of 73 across 26 cities.
So are these new stores the main reason the margins are smaller?
They definitely play a big role. New stores mean upfront cost, like staffing and rent, especially while those stores are getting going. It's a classic case of short-term pain for long-term gain.
And it sounds like Ethos isn't afraid of that short-term pain, especially with those roadblocks they hit.
Right, the GRAP implementation in Delhi NCR, those pollution control measures really delayed things, impacted construction, staffing. It was a 75-day delay. But even with that, Ethos is still pushing ahead with expansion. They're planning 6 more boutiques by the end of fiscal year 25.
It seems like they really believe in the Indian luxury market. But expansion isn't the only thing they're doing. They're also going for those exclusive brand partnerships.
Definitely, they get that exclusivity is key in the luxury market. Since April, they've signed 6 new exclusive partnerships, and these brands are already bringing in almost 30% of their revenue.
That's a big chunk. What are some of those brands?
Well, just in Q3, they added 3 big names. First, Christian Vaterklau, a Dutch brand, known for its astronomically themed watches. Imagine a planetarium on your wrist.
That's definitely something different. What else?
Then there's Carl Succi and Cerna, an Austrian brand that was revived. It combines Viennese elegance with modern Swiss watchmaking. Really refined, exclusive watches with a long history.
Sounds like they're going for a specific kind of customer, people who want more than just a watch, but a piece of history and artistry.
Exactly. And to round it out, they partnered with Zero Halliburton, the American brand known for its aluminum luggage cases.
Like the ones they used to bring back moon rocks, it's like Ethos is creating this image of aspirational luxury that goes beyond watches and into a whole lifestyle.
That's a great observation. They're not just selling products, they're selling a story, an experience. And they're tapping into a growing group of affluent Indians who want brands that reflect their success and taste.
Yeah, it's interesting how they're creating that image of exclusivity and aspiration. Not just about the watch, but the whole story behind it.
Yeah, for sure. And you see that in the sales numbers. Remember the average selling price going up?
Right.
Well, it's gone up 11.2% year on year to $2,007,513 for the 9 months leading to December 2024. And the percentage of luxury and high luxury watches they sold has jumped from 68% to 71%.
So it's not just buying more watches, they're buying more expensive watches. Looks like Ethos is doing a good job at tapping into that desire for high-end watches. But what's causing this shift? Is it just because more people have money to spend?
Well, the rising number of H&Is in India definitely plays a role, high net worth individuals. But it's more than just catering to rich people. They're actually shaping the market, making these brands accessible and desirable to a wider audience.
So creating that sense of aspiration, that goes beyond just the super wealthy.
Exactly. Think about it. You go into an Ethos boutique. You're not just looking at watches. You're stepping into a world of luxury and craftsmanship, knowledgeable staff guiding you through the brands, helping you find the perfect watch to express your style.
It's that personal touch that elevates the experience.
Exactly. And Ethos knows that their people are key to that experience. They're investing heavily in talent acquisition and development. They know their staff's expertise is what's dragging this growth.
So it's like they're creating a team of luxury ambassadors. Makes sense, because you need more than a fancy store. To sell a $200,000 watch, you need someone who can tell the brand's story, explain the mechanics, and connect with the customer.
That's right. They're creating a culture that values passion, expertise, and customer service. Not just salespeople, but watch enthusiasts who can share their knowledge with customers.
And they're doing all this while being smart with their money. Remember those success fee fundraising rounds they had? The IPO in May 2022, which raised 40,226 lakhs, and then the QIP in November 2023 for another 17,499.82 lakhs.
Yeah. And they're using those funds responsibly. The monitoring agency report shows they're using the capital for things like working capital, new stores, renovations, upgrading their ERP system, and other general corporate purposes.
That's good to know. It shows they're committed to transparency and accountability.
Absolutely. And when you combine that financial prudence with their growth, their expansion plans, and focus on exclusive brands, it paints a very positive picture for the future of Ethos.
But of course, there are always challenges, especially with their goal of a tenfold increase in revenue over the next decade. It's ambitious, and a market is constantly changing.
Yeah, you're right. The luxury market is definitely fickle. Consumer preferences change quickly, and economic downturns can impact spending on things like watches. But Ethos seems to be adapting well.
How so? What are they doing to stay ahead of the curve?
Well, for example, they're getting into pre-owned luxury watches to cater to a wider audience and address sustainability.
That's smart. Consumers are thinking more about the impact of their purchases.
Exactly. But that's just one piece of the puzzle. To hit that 10x growth, Ethos needs to deal with the competition. Other players in India and international brands coming in.
So how do they stand out? What's their edge?
Well, they have a strong network of boutiques across India, so customers can experience those brands firsthand. They've chosen brands carefully, a mix of well-known names and niche brands with unique stories.
And they really understand the Indian consumer.
Yes, and they're using technology to reach more people. Their online platform complements their physical stores.
So it's both online and offline working together.
Right, but they still face challenges. Economic downturns, geopolitical issues, supply chain problems.
Yeah, those are all valid concerns. Luxury goods are usually the first to be affected when things go bad.
True, but Ethos has been resilient in the past, adapting their strategies and focusing on efficiency. They've also diversified their sourcing and built strong relationships with brands.
So they're being proactive.
Exactly. They know the luxury market is always changing.
It sounds like they're taking a balanced approach, ambition with a bit of realism. But with all these factors, do you think they can actually achieve that 10x growth?
It's tough to say for sure. The market is unpredictable and a decade is a long time. But looking at their track record, their vision, and their team, I'd say they have a pretty good chance.
They're definitely a company to follow.
Yeah, it'll be interesting to see how they use technology to connect with customers, especially online. Imagine virtual boutiques, personalized online experiences, maybe even augmented reality to try on a watch from home.
That sounds exciting. And don't forget social media. Platforms like Instagram are important for luxury brands.
You're right, Ethos is already on those platforms. But they could do even more to tell their brand story.
It's like they're building a luxury ecosystem. Every interaction reinforces that feeling of exclusivity. It's not just buying a watch, it's joining a club.
That's a great way to put it. And it's not just attracting new customers, it's keeping the ones they have and making them loyal. Luxury consumers want more than products. They want experiences and connections.
It's about creating an emotional bond.
Yes, and Ethos seems to get that. They're not just selling watches, they're curating experiences, building relationships, creating a brand that resonates.
It's that combination of strategy, execution, and emotional intelligence that makes them stand out. But we also need to look at the numbers. Because growth is great, but you need a solid financial base.
That's where their financials come in. Can they actually back up these big goals?
Well, let's see. Their latest filings show they have very little debt.
Right, just 5.45 crore, which is super low for a company this size.
So they're not building their business on borrowed money. That's a good sign, isn't it?
Definitely. It means they're being careful with their money, not taking unnecessary risks. It gives them flexibility. They're not stuck with huge interest payments, so they have more to invest and to deal with problems.
But debt's just one part of it. Are they making a profit? Revenue doesn't mean much if they're not actually making money.
Well, this is where things get interesting. Ethos isn't just growing, it's growing profitably. Their latest quarter shows a profit after tax of 29.5 crore, and over the 9 months, they made 73.5 crore. Those are really good numbers. Shows they're running a tight ship.
So low debt and solid profits. Two key things for a healthy business. But you mentioned their margins are a bit smaller. Because of those expansion costs, should investors worry about that?
It's something to watch, but I wouldn't panic just yet. As those new stores get going, those margins should improve. It takes time for a new store to reach its full potential. Plus, Ethos is making investments that should help in the long run, like upgrading their ERP system to be more efficient.
So short-term pain for long-term gain.
Exactly. And it's not just about cutting costs, it's about spending wisely to support their plans.
Speaking of spending wisely, how can investors know Ethos is being responsible with their money, especially after those IPO and QIP rounds?
Well, that's where that monitoring agency report comes in. It basically confirms that Ethos is using the money from those rounds for exactly what they said they would. Working capital, new stores, renovations, the ERP upgrade, and so on.
That's good to know. Transparency is really important.
Absolutely.
But to sum up, Ethos has low debt, good cash flow, solid profits, and they're using the money responsibly.
Yeah, they're doing well, and that's what makes it so interesting. They're not just riding the luxury wave in India. They're building a brand that's solid, smart, and efficient.
But a company is only as good as its people, especially in luxury retail, where personalized service is so important. What's Ethos doing about talent?
They get it. They know their employees are their biggest strength. They're really focused on talent development, investing in their people, training them, creating a culture of passion and excellence.
It's more than just knowing about watches, right?
Right. It's about giving customers that amazing experience. Ethos looks for people who are passionate about watches and about service, people who can connect with customers and personalize things.
Sounds like a tough hiring process.
It is. They really focus on finding people who fit their values. And then new hires go through a big training program at their own training academy.
So they don't just throw them in the deep end.
Nope. It's structured and organized.
And the learning continues after that?
Yeah, they have workshops, seminars, mentoring.
So it's a constant learning environment.
And they've created a great culture where employees feel valued and respected.
Which usually means happy customers, too.
Absolutely.
So they're investing in their people, building a good culture, and giving great customer experiences. But there's another big thing nowadays. Sustainability.
Right, consumers really care about that now, especially luxury consumers.
So how is Ethos handling that?
They've made it a core part of their business.
So it's not just a marketing thing.
No, it seems like a real commitment. They have a whole sustainability program covering things like the environment, ethical sourcing, and diversity.
Wow, that's a lot.
Well, for the environment, they're doing things like reducing energy use in stores, minimizing waste, and making their logistics more efficient.
How about sourcing?
They have a strict code of conduct for suppliers, covering labor standards, environmental stuff, and ethical business. They also work with suppliers to make sure they follow the rules.
So it's not just words, they're actually doing things.
Exactly.
And what about social sustainability, diversity and inclusion?
They have a council for that. And they do training to make their staff more aware. They're also making their stores more accessible and working with groups that support underrepresented communities.
So they're walking the walk.
Yes.
But how do we know all this is actually making a difference?
They have a sustainability report every year. It shows their progress, and they use third parties to verify things.
So there's real data behind it.
Right.
So they're doing a lot, but is it enough? Can any company really be 100% sustainable these days?
That's a tough one. It's a big debate. Ethos is doing great, but sustainability is a journey. There's always more to do.
So it's about always trying to be better.
Exactly. And Ethos seems to get that. They're always looking for ways to improve.
Which is a good message for consumers.
It's also good business. Sustainability is important now. Companies that do it well build trust and a good reputation.
So Ethos is financially sound, strategic, and sustainable.
Yes. But the market is always changing. They need to adapt and innovate to keep up.
It's about staying ahead of the game.
Right.
Well, we've covered a lot today. Financials, growth, people, sustainability. What's the main takeaway for our listeners?
Ethos Ltd is a great example of vision and strategy. They're a company to watch, not just for their success, but for how they do business.
We've given you the basics. Now it's your turn to learn more. Check out their reports, their website, their social media.
And don't stop there. Keep learning and exploring.
That's what the deep dive is all about. Thanks for joining us. Until next time, keep exploring.